can say there's a lot of important numbers there, but the most important one is operating cash flow. That is the amount of cash produced by your operation. That is a very important number. If you stay negative, any company that stays negative for too long goes out of business. That is the way it works. It means you run out of cash and you're done. It might take you 15 years if you have a public company and you can sell stock in it, but eventually that number has to be positive. That's the way it works. And that is something that is good to focus on. Again, short term, it can fluctuate a lot, but it's something you really want to monitor.
In this powerful episode of the podcast, we're going to sit down with Douglas Carpenter. Douglas is a CPA, legendary tax strategist. He comes with over 35 years of experience helping businesses to maximize their profit and legally minimize their taxes. Guys, let's dive in.
Well, thanks for the introduction. I appreciate that a lot, and I'm happy to be here.
You're welcome to the podcast, Douglas. How have you been today?
Good. It's been good. Busy as always. The nice thing is we're between tax deadlines, so I have time to do a podcast.
Great. Where are you joining us, if you don't mind me asking?
I'm sorry, what's that?
Where are you joining us from today?
We're in New York. I'm on Long Island. We have offices in Melville, and that's where we're based out of. In today's environment, you can basically broadcast from anywhere.
Great. So Douglas, I read a bit about you there, but can you tell us a bit more about yourself, just the background?
Sure. The background is I have a diverse background. Really, my skill set is in accounting. It's in finance. I was also a project manager, and I have a background in IT as well. So that's really the four legs of the chair, basically, that I sit on professionally. The combination between accounting and finance, what I found when I was getting trained, was that finance people kind of know what to do with the numbers, but they don't exactly know the intricacies of how they're derived. Accountants know how they're derived, but then they don't necessarily know what to do with those numbers to drive a business. What accounting really should be doing, accounting and finance married together, should be taking your results or taking what you expect to be results and driving that business forward. We like to think when we have our clients that we're actually making them money and not costing them anything at the end of the day. That's at least our goal. Doesn't always happen, but that's what we try to do.
Yeah, awesome. It's a good mix, isn't it? I also have a first degree in accounting, second degree in finance as well. And, I also, as a trained accountant of several years now, I do understand really that, sometimes now, especially going forward, a lot of organizations are trying to infuse both. And I actually like the way you divided both of them. Accountants know how to derive the numbers, finance people know how to help project. And I think these days, in this emerging world, a lot of organizations want both. Why separate it when you can have someone who can do both? So that's really interesting. And thanks again for coming on the podcast today. And I know it promises to be a very, very interesting conversation. Right. Let's start like this. Let's talk about some core values that you have, your education plus, your actionable sort of points, right? You have helped clients save over $250 million. That is a huge amount. What are the most overlooked but completely legal tax saving strategies that businesses often miss?
When we talk about tax strategies, it really is a holistic approach because you have both the business and the business owner, and the two are separate legal entities, usually. So you have to look at them in tandem in terms of what your savings. But the biggest area that we see in savings will be first on the personal side that we're looking at. There's a lot of tax strategies. There's the basic strategies of 401ks and things like that most people are doing. But there's also a lot of smaller side things that they should be doing, deductions that they don't realize they can legally take, things that they do, ways that they are booking things in terms of expenses, what's deductible. And we also assist with the record keeping behind it because it may be legal, but you got to be able to prove it. And that's something also. So we help with the documentation, but there's a lot of things out there that people can do to save money. That's one aspect of it. The other aspect of it is when we look at a business, we're going to look at their entity structure. We're going to look at what best suits them. In many instances, it's an S corp is the right thing. I'd say that's the right answer, and most of the time is to have an S corp, but it's not always the right answer. There are other alternatives, and sometimes it's a C corp. It depends on what you're looking to do. You can also integrate trusts into your personal planning, also into your business planning. That can save a lot of money. And the other side of it too is we get clients that will initially tell me, my business is at a loss and it's legitimately losing money, so there's no tax savings. Well, that's absolutely not correct. There's a lot of things you can do. A loss is golden. You can use that. Don't just carry it forward. If you have, say, $100,000 loss in your business and you carry it forward, you've lost your standard deduction on your personal tax return. So you want to try and generate income if you can to offset that, whether that's moving IRAs over into Roth IRAs, into recognizing income at a certain time, taking capital gains. The biggest ways that we've saved money, the largest monetary items are usually 1031 exchanges in real estate, and in businesses as well. Sometimes a business can qualify. Um, setting up trusts, saving in estate planning is something that is done. We have attorneys that we work with. I don't do the actual estate planning, but we have experts who assist with that as well. But I can certainly spot it and say, this is what you need to do in order to protect it's not just savings, it's wealth protection. It's not just saving on taxes, but it's preserving your wealth. We have clients in the hundreds of millions of dollars in assets, and that's a lot to manage. And if it's not managed appropriately, when probate comes or when estate comes, you may find that the business is not able to support the taxes. It has to be sold at a fire sale. You don't want that. So good planning is a big part of our tax saving.
Yeah, planning. There's nothing. Yeah, I don't think there's anything that beats good planning. You're right, absolutely correct there. Just to another important point, I would like. I'm sure a lot of people are asking. Okay, accounting and finance. Yeah, I'm going to ask you a simple question. What is the difference between having an accountant and actually having a strategic financial advisor in your corner? Is there any difference there, and what are they?
Yeah, I mean, one of the things in my background is I was a CFO for 12 years. I was with a division of a New York Stock Exchange company. We were a large company. And the difference really is in that advisory. An accountant, and nothing against accountants, if what you're paying for is what you're getting, there's nothing wrong with what they're doing. If they produce reports and they hand them to you and explain them to you, and you're paying them whatever it is per month, that's fine. That's what you've engaged them to do. We go beyond that too with bookkeeping as well, and you could do that as well, have a bookkeeper. But the real value comes in. Accounting is not about the past. Accounting is about the future. It's using those numbers to drive your business. The money you made is what you made. That is what I can't change that. That is what it is. What you want to be able to do is best understand those numbers so that you can mold your future into higher performance, more profit, tax savings. That's what you really.
It's not just about the quantitative aspect. There's also the other aspect that doesn't have to do with numbers necessarily. So when people say that, and I'm sure as accountants, we can do a lot of. You can obviously look at prior years and try to make a forecast, isn't it? So, where does the qualitative aspect of accounting come in, and how does it compare with having a financial advisor? Does it compare at all or not?
It does, and there's a lot to that. I mean, one of my favorite questions to ask a client, and we do a lot of quarterly reviews. One of my favorite questions is, what are you going to do different next quarter that you weren't doing this quarter? And that's the kind of, they don't even have to answer it to me. It's just to get them thinking about, because what usually happens when you run a business, in most cases, is you're busy running that business. You're busy taking care of the problems that come up and the issues and everything else. And the thing that you never get to, that you know you need to, but you really don't, is that future planning. And it doesn't take a lot. It doesn't take a lot of time, but it does take some time. And that's a few hours, something to think about what you're going to do differently. Are you going to advertise more? Are you going to not advertise? Are you going to have a training program for your people? What are you doing differently? Are you going to talk to your customers more? What's that difference that you're going to do in the upcoming quarter to make your business stronger? It may not even have a monetary value. We also do a SWOT analysis, strengths, weaknesses, opportunities,
Okay.
and threats. And that's something that every business should do at least annually. Take a look at it. I've seen laundry list is really I try to limit people to a top five in each category. I've seen people giving 27, strengths. That's too much. But just focus on the real things that are driving your business and how you're going to address that. It's a nice annual exercise to do. When things slow down a bit, hopefully, businesses have cycles. When you're really busy, you're running the business. But when it slows down a tiny bit, these are the kind of things that are good to prepare and move the business.
Yeah, let's talk about small businesses. Sometimes it can be overwhelming to run a small business, I'm sure you understand that. So what's the first financial habit that they should develop today?
I think a lot of small businesses make the mistake of not having the right advisors. And I know a lot of people who can run their business very well from the actual mechanical of the business, but there's two different skill sets you have here. Running a business from the accounting standpoint, from the finance standpoint, is a very different skill set than manufacturing, than running a restaurant, than running a law firm or doctor's office, or whatever it is that you do. That's a different skill set from the actual management of the business. Now, when you get into a large company, they hire people like me to come in and manage the business. I don't know how to run the machine that manufactures something. That's never got involved in it, but I do know how to run the business itself. These are skill sets that very few people will possess both. A good example that comes to mind, we have an HVAC company that does air conditioning and heating and everything else. They're the best out there. I've used them myself because they're very, very good. But they don't know thing one about running a business. They don't know collecting from clients and getting, but they know enough at least to hire people like myself and others as well. They have a very good attorney as well that works with them, and a collections attorney and everything else. But these are the kind of things that you want to make sure they do. So when they have a contract, you want the right things in those contracts. You want me to be looking at your workers' comp and make sure that you're not overpaying, because that's a business that can have high workers' comp. People in the field, if they're using machinery and everything else. So these are the kind of things. They run their business very well. The parts and the stuff they order, they know what they're doing. They have inventory, they have trucks, everything else. But actually pulling all this together on the financial side, not that good. It's not a skill set they have, and they've brought in the right people.
Yeah. We're going to talk about healthy financing. Can you break down for us, the key components of a healthy financial statement? And what are some red flags that you always look for when you look about companies going concern? What are the red flags you look for?
But there are really three major parts of the financials that, and this isn't everybody, but it is the majority of people that I see. The first thing is some people don't look at anything. They just don't. I can email them their financials and I can see it's never been opened. That being said, the only time they discuss it is when I call them.
Right.
That's one. However, most people will look at it, and when they do, they look at their profit and loss statement. They go right to the bottom and they say, okay, this is what I made. And let me understand that. Okay. Ignored, but more important is the balance sheet. Or no, I shouldn't say more important, but also important is the balance sheet. And that is the profit and loss is telling you what you just did, what you might be doing in the near future. The balance sheet is more about the future than it is the past. And that is how much cash do you have? What do your assets look like? What's your depreciation doing? Do you need fixed assets? What are your loans? What's your loan scheduling and that type of stuff. So the balance sheet is going to tell you more information about what's upcoming and what you might be facing in terms of challenges. And then your P&L. P&L is kind of the past. Balance sheet is sort of the future, but nobody seems to look at it that way, but it's an important thing. And then the final thing, which I usually get a blank stare when I'm getting a new client, is statement of cash flows. What is that? Well, statement of cash flow is actually the most important number of all your financials. You can say, there's a lot of important numbers there, but the most important one is operating cash flow. That is the amount of cash produced by your operations. That is a very important number. If you stay negative, any company that stays negative for too long goes out of business. That is the way it works. It means you run out of cash and you're done. It might take you 15 years if you have a public company and you can sell stock in it, but eventually that number has to be positive. That that's the way it works. And that is something that is good to focus on. Again, short term, it can fluctuate a lot, but it's something you really want to monitor. The other thing that comes in is people say, "Hey, I made $250. Where did it all go? I don't have any money in my pocket." And this is a common thing I get. One of the things I like to do sometimes is I'll take $100 and we take a theoretical $100 and I show you $4 went here, $8 went here, $32 went here, and $6 wound up in your pocket. And of that six, this is what happened to that. $4 paid loans, a dollar went to salaries that you pay yourself, and that's why you feel like you have no money.
Oh my God, it feels like I'm back at school. Guys, this is a great episode. I'm gonna make sure that make sure you're watching this and smash that like button, guys. Comment, tell us what question do you have for Doug today? Tell us the question. Let's get moving, guys. Because I think that question there relates to me as well, because I recently got into a business with some friends, and it's just something we just recently set up. We're trying to do the operations aspect of it. We're trying to set up our processes, our procedures, and all these things. So, as a small business, that is really important there. Thanks for that very, very wonderful take. You've seen a lot of business owners leave a lot of money on the table. So, what are 2 or 3 mistakes you wish you could stop every founder from making?
The first one is a much tougher look at their taxes. I I've yet to have a single tax return. I can say this with complete honesty that we haven't been able to find money that was left on the table. It's universal. And it's not the fault of the preparer. It is not the fault of the person doing it. It is the fault of Congress that has made the tax code so incredibly complicated that there's always something on there that we can find. It's usually on the larger side. I mean, I can't say that it's small. Obviously, the larger the entity, the more potential there is for saving. The other side is I think a lot of people very much underestimate the budget process and how beneficial it can be to a company to do proper budgeting and forecasting. Forecasting is good for running the short term. I'm sometimes asked, when can I get my financials? And I'd like to joke and say 3 months before they happen. And when I say that, I'm only half joking because I can do a forecast that's usually very accurate. Depends on your type of business and how much information I have on you. But if I've been doing your books for the last 2 or 3 years, I can usually give you your financials very accurately before they've occurred because I know you well, I know your cycles, I know what's going on, and it's a matter of running your cash flow through, which is also good. The other thing is to manage, I think the third biggest mistake is not managing the cash flow properly. So things come up, emergencies come in, and there may not be enough cash or they're strapped for cash. A rule of thumb I use for people always say, how much cash should I have on hand? And I'm going to give the listeners here a freebie on this. About 2 weeks of expenses is what you should have cash in the bank at all times. And then beyond that, available cash of about 6 more weeks of expenses. By available cash, that would be a line of credit, a relative somewhere that's willing to write you a check for any amount. But whatever that is, that makes a lot of sense. I consider a company that has cash available to it of 2 months of their expenses to be well funded and probably will not run into any problems. You also have enough leeway to make a course correction if there's a problem. So let's say you have a really big client that you've had for years, and all of a sudden something happens to that client. Well, you've got 2 months of pure cash there to help your business through. Maybe you need to make adjustments in payroll to people or whatever else, but it gives you enough time to make those changes that need to take place.
Brilliant. I'm sure, guys watching, I'm sure you're learning because this is a masterclass on finance and budgeting. Let's talk then about budgeting. You've talked about it there, how powerful it is, especially in the short term, especially when you talked about the forecast. With budgeting being such a powerful tool, what is your go-to formula or system for building a budget that actually works and supports profitability?
Yeah, budgeting is one of my favorite topics. It's something I've always liked. Now, I learned from the best. I used to work for a top four accounting firm, and my first project on that firm, when I was junior accountant at the time, was to help put together the budget for them. It was an 800-person division that I went in and did the budget. So I learned the basics of budgeting really from them, and they're very good at it. From that, and give me 30 more years of doing that, I've gotten pretty good at formula. First of all, the budget really is two theoretical pieces. One is the numbers themselves. The other is how you actually come up with those numbers and what you're doing within that process. The process is far more valuable than the numbers. The numbers are important and they'll tell you what to do. And I could do an entire webinar that would last 3 or 4 hours on just how to put a budget together. But covering the key points, the first side in terms of the numbers is the past always repeats itself. So what do you start with? You start with last year's numbers, and it stays exactly the same except for what's going to be different, which is kind of an ironic statement. So everything will be exactly as it was except for the things that won't be. So you're going to look at, there are really 3 major components to any business: sales, cost of sales, and payroll. Everything else is kind of somewhat important, but isn't going to really move your needle. So what you want to do is first isolate sales and figure out what your sales are going to be. If you have a consistent business, that's not that terribly difficult. If you have one that's not consistent, say a construction company that you could get large projects, then you're going to look at your pipeline, put in odds of what you think you're going to get within that pipeline and use that. So if you are bidding on a job and you think you have a 10% chance of getting it, and it's $1 million job, $100,000 can go into your budget. And then that's your chance. And you're going to all of that out as the way it is. You get better at it as you go, but that's how you predict it. Now, if you have, say, a restaurant, which we do a lot of restaurants, we'll look at their sales trend. And we'll look at their seasonality. They do more in the summer, so we'll stack the budget up more in the summer. We found, say, they're growing 3% from the previous year. Maybe we'll add 3% again this year. And we'll look at their recent trend. Yeah, it was also up 3%. That's a pretty good guess to what it is. That's where we start. Cost of sales is a little bit more controllable, but you see, if you've got your sales correct, now your cost of sales should be a ratio generally, and not always 100%, but generally it's tied to sales. So it's going to be a percentage of your sales. That becomes a fairly easy number. If you know that some supplier or something is going up, you factor that in as well. Now you go down to payroll. What you really want to do is a head count. So you're going to take every single person, don't care how many it is, their salary, and now you're going to take a look at that. This is where this takes actually some time to do. And you're going to figure out what the raises are, what you're going to do, what bonuses might be within there, and so forth. Now, when you're finally done with that, you're going to look at it and say, does this make sense? Now, if you're showing a loss every month, you've got to change some things and you've got to address. Now, here's where the second part of the budget becomes important. Or maybe you're not losing money, but you're not making as much as you want to. Well, is payroll the right thing to look at? Do you really need all these people? Do you maybe need more people? Whatever it is, but that's what you're going to determine. These are the things. One of the things I used to do at a public company, we would be putting budgets together. And I'd meet with the salespeople, each salesperson. I'd say, the first year I did this, it blew their mind because I asked them a question that I don't think in the history of Earth has ever been asked to a salesperson. And that is, quantify what your projections are. Tell me how you're going to do this. They'd come in, I'm going to grow 30%. Great, wonderful. How do you intend to do that? And I'd get this deer in the headlights stare that nobody ever asked me that before. And you want them to be able to explain that. Now, we'd take that 30%, we'd start cutting it down, and at the end of the day, we'd wind up with something like 8%. But it was real. And the other side of it is, then they start thinking, well, go back to your desk, come back tomorrow or a week, and tell me and write it out and show me what your plan is. Put a plan together. Now you got every salesperson putting a plan together for next year. It's not quite so haphazard. You're starting to tighten the running of the business. And even if you're a sole practitioner, even if it's all just you, it's still a process you should ask yourself. I want to grow 10% next year. How do I do that? If I repeat this year, that may not happen.
Okay.
Whatever your goal is. So it doesn't have to be a salesperson you're talking to. It could be yourself. But we found it to be very beneficial. And then what happens is say, well, I'm going to attend conferences next year. Okay. Is that in our budget? Well, maybe it's not. So maybe we should put more money into conferences next year. And that's where the process really takes off. You get a purchasing manager, say, at a restaurant. You say, listen, I'd like to see cost of sales go down by 2% if you purchase better. And if you do, we're going to give you a bonus of $10,000 at the end of the year. Now you've hooked them in. And they may come back and say, I'd love my bonus, but it's impossible. I get the best prices out there. Okay, that's not something you can, but usually that's not the answer. Usually they'll try a little harder and you'll wind up getting 4.2%.
Oh my God, that is brilliant. That is a brilliant, brilliant illustration there and just explanation of the budgeting process. And I'm sure, I don't know, I'm sure at the end of this, we're going to be able to put your details in the description so that people can contact you directly if they want that one-on-one time with you. That would be awesome. But no, let's just move on to some industry insights, a bit more about tax and things like this, something that might be a bit more thought-provoking. So, based on your experience, right, how has this, and with the arrival now of AI, with the rise of AI automation, new regulations and things like this, how has the world of tax planning changed? And then what should business owners be paying attention to in 2025?
Okay. Um, I see more and more, quite recently, in fact, programs that come up that will save you on taxes. I'll confess something. That is, I sign up for every single one that's out there. I got a subscription. I usually cancel it after I try it out. And it's not to learn what they're doing, it's to see what's out there and what people get. So when someone says, "Oh, I got this," now they range anywhere from $100 a month to 15,000 bucks a year. I've tried them all. What you generally get is what you'd expect, a canned solution. There's 10 or 20 go-tos. Most of them don't apply to you. The AI comes back, or whatever you signed up for comes back. There's one that's I won't get into the name. It's rather notorious. They come out at like $400 a year, but it's a bait and switch. And then they have all these other things they try and get you for thousands of dollars. But at any rate, I haven't seen anything that goes even close to the depth of a real live person going in and analyzing your situation. They are all so very different. When I do a tax plan, we're expensive. I'm not going to say we're not. But when I do a tax plan, I'm looking at someone's books probably for somewhere between 8 and 10 hours of my solid time looking at that. I have people also that prep the work for me, but it does take my going in there and actually looking. Maybe someday they'll have, computers that will do this, but even then, there's just so many intricacies in the tax code. And it's not really profitable for a company to put all these algorithms in and do these things that are not just generic. The generic stuff is easy. You can program a computer to go in and look at this point, this point, and this point. But to really go in and do this, you would have to program something quite a behemoth that's probably not going to be cost effective to somebody to do. And that's if they do.
Mm.
Plus, one thing I also want to add is we don't have one tax code. We have 51 tax codes. There are 50 states. There's also localities. There's the number of tax codes are endless.
Yeah. One thing maybe I failed to actually, I'm going to put a disclaimer at the beginning because obviously when it comes to especially the tax aspect, the audience that this might be relevant to will mostly be people in the US because obviously that is where you're based, and so I guess that because obviously there's a lot of like in the UK they don't have up to that, but again I know the US is very complicated, so that's not a surprise. Like one of the complications I don't know if you're a sports person. I'll never understand why football is called soccer and why what I would call handball is called football. And again, that is an American thing. But back to back to the topic that we have on hand. Just I'm intrigued. There's a lot of tax laws, codes, and all these things. Are there any new tax laws or codes that you're watching closely right now that could significantly impact small to medium-sized owners?
That is an absolute, with the big, beautiful bill that's out there right now, We don't know if it's going to pass the Senate. I mean, that's a very relevant question. It could change things an awful lot. One of the difficulties in tax planning, and let's see AI do this, is to look into the future as well. It's not just about the past. Obviously, when we do a tax plan, we're thinking about what they intend to do and what the tax laws will be at that time. You can plan a lot of different ways, but it can all change in a minute. It can all change very easily. It's very, it's very subjective to the actual, to the timing and what's going on. There's a lot of different ways that the tax code can change. It's in flux right now, very much so.
Okay. So what industries are you seeing the most innovation or need in when it comes to financial strategy and accounting? I have an idea, but I don't know. Let me get your own thoughts.
I'd be interested in hearing your thoughts on that because I can say that it really is. I mean, it's across the board. The ones that have the more, I would say, the more ways of going about it are companies that are expanding, companies with multiple locations that do business in different states. This is where we see a lot of savings. Companies with a lot of employees. There's a lot of things that you can do in HR that can save you in taxes. That's another thing when someone says their business is losing money. My next question is, how many people do you have employed? Well, I have 75 people. We can save money. There's stuff you can do in HR that'll save you on FICA tax.
Yeah, that answer there has just opened up another significant topic to me because again, you just said it right there, just right here, and we hear all the time people losing jobs because of some of this so-called streamlining of processes, this so-called, you know, getting leaner and having AI or computers or whatever, or even sometimes external organizations, contractors do certain jobs. What are your thoughts on people losing jobs to AI and some of these advancements? What are your thoughts on that?
Not sure where that's going. I think that's a big debate in the world today as to how much AI is going to take over. I think a lot of repetitive tasks, the more simple ones, can be replaced by AI, but there's still a certain thought process that goes into a lot of functions out there, and that's needed. People will always be needed for that. As far as losing a job, it's something I think that the best advice I can give to somebody who's losing a job is to use it as an opportunity to grow. Change is I call it the fertilizer of growth. It stinks, but it's necessary for growth. It helps you to take an inventory, maybe learn some new skills, change things around a bit, and perhaps position yourself even better than you were before.
Yeah, yeah, that's true. I must confess. Right. Okay. We're gonna get on to leadership and legacy questions. Things that have to do with your vision and sort of some a bit more personal things as well. You've obviously built a career that spans decades, just like you said there, in the beginning, and that I read out there as well. What has changed the most about the way people approach their business finances today? That is that many years ago when you started.
Yeah, when I started, I hate to admit, but it was pencil paper, 13 column spreadsheets and things like that. You sat with a calculator, and sometimes you'd spend your entire day as a junior accountant adding. So that has changed. Excel can do that in 2 seconds. So, that's changed a lot. A lot of the in person has changed. And I've seen a lot of flip over since the pandemic. There was always some of that. At one point, I owned a hedge fund administration firm. It was completely virtual. We did hedge funds and hedge fund accounting. And it was really in the earlier side. That was around 2005, 2006. It was in the earlier time that you could do virtual. You go 10 years prior to that, the information wouldn't have been available online. I'll give you a great example. When you did tax returns back in the old days, we used to have these file cabinets in the accounting firms. They were stacked floor to ceiling with tax forms. And maybe you remember that. As I see you smiling, so I know you probably remember that.
Not much, because I'm very, you might be shocked to hear about not much.
You'd go in and you'd use the tax form that was there, and God help you if you used the last one. When you got to that last one, the bottom, you were supposed to make 10 photocopies, bring it back, and the original was always there. If you use that original, you could be like, if you weren't fired, you'd be executed by your fellow coworkers because these forms were so hard to get.
Okay.
So if I had to do a tax return, say in Nebraska, I'm in New York. How would I do that? I would have to go to the Nebraska Department of Revenue,
Okay.
to them, ask them for their tax form, or alternatively, go to a very large library that has master tax guides that has all the forms in it, maybe if I can get it. And this is, I'm talking about state forms. Federal forms are sort of the same thing, a little easier to get, but still very difficult. Today, obviously, you go online, you'll have it in a minute. And if, in most cases, it's a PDF filling. So you're going to fill in the information online, download it, and you're done. Everything was pencil and paper back then and everything. So that's changed very dramatically. But the one thing I think that qualitatively that's changed is there's a lot less personal interaction. You would go in as an accountant, you would get in your car and drive over to their office and review their books because that's where their books work. Today, everything's online. And one of the things I try to remind myself is to have that personal connection with clients, is to make sure that we talk to them. Zoom calls are great. If I can see them in person, that's fine. But I have a lot of clients across the country. But we try and do these type of Zoom calls just like we're doing now, to stay connected and be involved in the business.
Yeah, a lot has really changed. I 100% agree with you there. I mean, I was born in '93, so that's not a long time. Probably when I started working was officially just about 10 years ago. So I wouldn't say that I was in those times, to be very honest with you. But I do understand because I had back in school, we used to do, journals. I remember when I started, we didn't have computers where we would do some of the things on Excel or anything like that. So for instance, in the first lectures on accounting would be on paper where we would draw the journals on paper, open sales accounts, purchases accounts. So you would have a lot of T's, like, when you're doing all the journal, which was a whole lot of crazy work. So that's really the little understanding I can sort of what I can relate with there. But in practice, I haven't actually dealt with that. So that's interesting. That shows improvement, advancement, and all that, which is good.
Say the one thing that's changed a lot is, quite frankly, the quality of accounting. It is very hard to find accountants under the age of 40 that understand accounting. They didn't do it by hand. And that makes a big, big difference. You need to struggle with it for about a year and a half, struggle to really learn it. And today, everybody comes out, they put the information in QuickBooks, and QuickBooks does the thinking for you.
Yeah.
And I have a very hard time. It takes me about 2 years to train a new accountant that I bring. So, and it requires a lot of things that you just think you take for granted that they would know, they don't. And but the problem is it's just not available to be taught.
It's that simple rule, isn't it, dog? It's that simple rule, every debit entry must have a corresponding credit entry. It's a simple rule, but as simple as it is also a bit complicated. It's more complicated than just that, It's also as complicated as having the 5 elements, classifying things properly, classifying things into your assets, your liabilities, your credits, your revenue and expenses. Also understanding the assets must be in the debit balance and expenses must be in a debit balance as well. All of that ones are credits. So now, you now ask yourself, how come? It's crazy. And I'm not surprised because, especially these days, people want to do things quickly. They don't want to take that time to learn, understand that process. So I understand, I can really relate with you there, the challenges you may have in teaching people.
It's amazing. I can say, even in the last 5 years, I see a tremendous decrease in the quality. When we get a new client, it used to be they were changing because their accountant was retiring, whatever. You'd get books that were in good order. There wasn't a whole lot to be done. And I can't remember any point this year and probably last year where we got a new client and their books weren't completely messed up. I mean, in some way, I have one that I'm working on now. He's getting audited, unfortunately, and his books have not been correct since 2012.
Wow.
I can go back. There are errors in those books. We can go all this in QuickBooks. He's got a lot of history, and there are stuff on the balance sheet, balances that you look back, and they've been sitting there, $100,000 sitting on the balance sheet for 15 years and untouched. Nobody ever questioned them. He's been through about 6 different accountants.
6.
Yes,
Wow.
in that time. And I can also tell when you don't have to tell me when you switched accountants. I can look back in the books and tell you when you switched. This is the new person. This is what they got wrong. This is somebody else. They don't understand how to do this. And you could just see it. It
Wow.
really is something.
Wow. Wow. Interesting. Right. So just moving on there, what is one client success story that still gives you goosebumps? Where smart financial strategy really changed a life or business? Obviously, you don't have to mention the organization if you don't want to, but want to hear the story.
We have a lot of clients that that we help along the way. We went into the pandemic. I'm going to answer this question twice. We went into the pandemic. We do a lot of restaurants. One of our key areas. We do all time, accounting for all businesses, but restaurants is one of them, and hospitality. And we had at the beginning of the pandemic 160 restaurant locations that we did books for. In 2022, when the pandemic was over, 59 of them were still in business. That, I think, is, I'm not going to say that in every instance it was us that kept them open. We did all kinds of things. Of course, we got all the payroll protection and all the things that the government aid that they could get, but we went out and did all that for them on the employee retention credits and all these things that we did for them to get it. But I would say probably in 20% of the cases, we made a very critical difference in it. I remember one guy was ready to shut down he just wanted to shut down the whole thing. And I kind of talked him off the ledge. And he's glad I did, because he did make it ultimately. It was a very tough time. But this is, that I'd say is the thing I'm most proud of. I think the best demonstration I can give of this is where I was with a public company. I was their CFO for 12 years. When I entered that company, they were doing about $39 million in sales and making $3.5 million a year. Not bad for a manufacturing company. When I left 12 years later, we were doing $160 million and making $3 million a month. And the success of that, it was a lot of people. There are 100 people that can touch that stone and say they were part of the success, all of us. But one of the key drivers of that was the budgeting process. That was something that really got that going. And being able to take acquisitions by budgeting correctly, knowing what we could do and what we could grow and expand. It was really a key component among many that drove the growth of that.
Beautiful, beautiful, wonderful. I always like it when people take actions and do what they're supposed to do at the right time, especially when you listen to an expert. There's a reason why, we're experts. The reason why you are an expert, and yeah, it's that's awesome. Now, I'm sure a lot of people who do businesses who have no idea of accounting or finance or numbers, right? So how do you coach entrepreneurs or CEOs who are good at vision and sales, but not great at numbers?
It's really that's actually an easy question. And the reason it's easy is they know their business. That's why they're in business. They do what they do. And it's just a matter of then marrying what I do, which is understanding those numbers, which is the easy part, to what they do, which is the hard part. Running, actually the mechanics of their business I couldn't do what they do. But all I'm doing then is bringing in that extra information to them and the extra ideas and hopefully a little bit of motivation to actually get where they need to be. I've had business owners come in and say, I'm retiring in 5 years. I don't want to grow this. I just want to make the money and whatever. That's your goal. That's wonderful. That's what we'll gear you to. Usually it's I want to grow and expand and become, the next whatever. And we'll work towards that as well. But we become the oil that helps move your business forward. That's really what we are looking to do.
If you had to explain what you do to a 10-year-old, how would you describe accounting and tax strategy in one sentence?
We use numbers to improve your business. But that would be the simplest explanation.
Let's say you're granted one wish to simplify or fix one thing in the tax system. This is a very important one. What would you change first and
Well,
why?
I know what I'd like to do with the tax system, and there's other accounts that it would too. It wouldn't be good for my business because I make money, saving people on all kinds of
Thank you
tax.
for the honesty there.
But yeah, there's the honesty. So it wouldn't be great for me, but I think what would be great is a national sales tax instead of an income tax. It could be graduated so that essential items are excluded, so that people people that can't afford really, taxes aren't paying it on bread and milk and the basics and all that other stuff. But if you want to buy a yacht, it's going to cost you double. That's just you have the expendable items are you can graduate your tax rate to that. If I couldn't get that, if we're talking about the current tax code, I would simplify it. I think there's a lot of things in there. We know there's a lot of things in there that are very specialized. I mean, everybody wants to get that preferred tax treatment. Everybody does. A loophole that specializes for them. And that really isn't, it complicates things. And at the end of the day, I've always said if you owe the tax, you have to pay the tax. And you just have to get comfortable with with a number without deducting certain things and make it a simple flat kind of rate, and that's it.
Awesome. Okay, I'm gonna add one more question. So two more questions now. If the IRS was to give out awards, right, for most creative tax strategy, is there any playbook that you would submit?
There are things out there that are technically legal. I don't like to use those. um Anything that I have to kind of think about and say, how would I present this to an auditor without cracking a smile, is not something that I want to be associated with. There are some tax schemes out there and shelters. The IRS lists their dirty dozen. That doesn't mean you shouldn't do them. But if you do them, take a really hard look, make sure that you qualify, make sure you have all the documentation. There's actually nothing wrong with getting audited. Don't be afraid to be audited. The odds are very low. Don't be afraid, provided you've done everything correct. It's an inconvenience. That's the biggest thing that you should have to worry about in an audit. It's going to be inconvenient. You're going to have to produce records, but you're going to have all that. And I know everything that I've recommended is going to pass 100%. It's not going to be any problem. But in terms of the fringes, I think there are trusts out there that you can do that are very complicated. The typical IRS auditor won't even understand them. They're going to have to, but they're quite legal. You can do that. And there are things that you don't want to touch. There are things like tribal tax credits, which are out there, and those you wouldn't do. The IRS hasn't determined that they're illegal yet. I believe they will. And that's the other thing is, if it winds you up in tax court, you probably also want to avoid it. That's something they may rule in your favor, but who wants to go through that, that potential of a problem? So you want to make sure that what you're doing is not just legal, but also been tried and true. You don't want to be the first one down the line to try this thing out because you've interpreted the tax law a certain way. So the things that we always use are the things that are pretty standard.
Yeah, and I can relate to that as well. You don't want to complicate things sometimes. Just play by the rules and you'll be fine. Yeah, the last question for you, Doc. Thank you so much again for coming on the podcast. It's been an absolute honor to have a great mind like you.
Thank you.
The last question, if you could bust just one myth about taxes or accounting that frustrates you the most, what would it be? One myth.
It's one of the frustrations we have in accounting is I might take days to resolve an issue that we will then cover in 10 minutes. And the only thing the client will see is the 10 minutes, and it's good stuff, whatever. This person that I'm straightening out their books are from 2020 is taking me weeks. There are issues everywhere. Now, this client's great and really understands the amount of work that's going into it, so that's not a problem. But to be honest with you, we'll get on a half-hour phone call and I'll tell them what's been going on and what's doing and how we fix it, and be addressing the IRS and all the other things that are going on with that. But I don't think people truly understand how technical some of this stuff can be and how much work goes into doing it well. And that's really the problem. Is a lot of the books I see are done quickly. Nobody really understands. Nobody really cares. And until you're called out on it, you may not need great books. Maybe you don't need great books until something happens. I say this all the time. Nobody calls us when things are good.
Yeah.
There's going to be an issue in front. Hey, things are great. Let's call these guys and change your accountants. It's usually when something reaches a boiling point and they have to make the change. More of the frustrating thing is people don't change with the understanding that having good books is really so beneficial.
I mean, accounting is one of those professions, isn't it? People don't come to you unless there's a problem. Accountant, lawyer, doctor, all these professions. Nobody will visit a doctor unless there's a problem, isn't it? Same goes with.
You might do your annual checkup. It's kind of like your annual tax return. You'll do what you have to. You do kind of things, but yeah, no, you can, if you have a proactive relationship with your accountant, and they can add tremendous value to your business. It's just a matter of recognizing.
Great. Thank you so much, Doug, for coming on the podcast today. So this is your time to tell us, share with us anything that you have coming up. If you've got a masterclass, a program, if you've got a website, if you've got an event or anything you want people to sign up for, please tell us now. Thank you.
Yeah, they can always, they can contact us. I don't know if you're going to have our contact information available, but you can look us up. You can look us up on the easiest website. The one that connects to others is Books for Hospitality, because we do a lot of hospitality. It's not limited to that, but www.books4hospitality, and that'll get you to our website. You can link to us as well.
Awesome. Thanks a lot for coming on. Really been a great time. I've learned a lot myself personally from this today. Guys, if you love what you've heard today from Douglas Carpenter, please don't forget to follow the Curious Tycoon podcast, share this episode with a fellow business builder, and for more expert insights and practical strategies, subscribe wherever you get podcasts, and don't forget to check out Douglas Carpenter's website as well, to see how you can start saving big today. Again, the website is down in the description below. Thank you so much, Doc, for coming on. And guys, please do the 4 magic things. Comment, share the video, like, and do not forget to subscribe to the Curious Tycoon podcast. Until I see you again in the next one, take care, goodbye, and God bless. Bye.